There's a fund that owns a piece of almost every public company on the planet. Apple, Nestlé, the company that makes your toothpaste. Roughly 1.5% of all of it, about 7,200 companies in 60 countries. And here's the part that should bother you. It could, at any moment, try to seize control of some of them, and it specifically, deliberately, on purpose, refuses to. It owns a slice of everything and bosses around nobody. That's weird, right? That's not how money usually behaves. That fund belongs to Norway, 5.5 million people, a lot of fjords, and the world's largest piggy bank. And it's just one of a very strange club. Because floating around global markets right now is about $15 trillion of money that belongs not to people, not to companies, but to governments. State-owned cash invested in everything from skyscrapers to football clubs to slices of OpenAI. 15 trillion, that's roughly 3 times the size of the entire global hedge fund industry. You know, the guys in Patagonia vests who think they run the world. 3 of them stacked, and you're at one Norway and friends. So the obvious question, the one everybody asks the second they learn these exist, are these things secret weapons? Government money quietly buying up the world to win some invisible chess game? Or are they just really big savings accounts with a flag on them? And the answer, the genuinely annoying, can't fit on a thumbnail answer, is both, at the same time. In a mix that changes depending on which one you're looking at. And the line between smart investing and statecraft is, in a lot of cases, impossible to actually draw. Stick around, because by the end you'll be able to look at any one of these funds and tell which game it's really playing. But first we have to answer the dumb-sounding question that turns out to be the whole thing. What is one of these? Okay, a sovereign wealth fund is what happens when a country has more money than it currently needs and decides not to spend it. Usually because it's sitting on something finite. Norway found a North Sea full of oil. The Gulf states found a desert full of it. And the smart ones all had the same terrifying thought: this runs out. The oil leaves the ground exactly once. So instead of blowing it on one glorious generation of sports cars, they converted oil in the ground into money in the market, a machine that, in theory, pays out forever, long after the last barrel's gone. That's the whole trick: turn a thing that ends into a thing that compounds. But wait, you say reasonably, why not just hand the cash to citizens, split the oil money, everyone gets a check, democracy? And the answer is that dumping a fire hose of cash on a small economy mostly just makes everything cost more. Economists have a wonderfully judgmental name for this: Dutch disease, named after what natural gas did to the Netherlands. Plus, you'd be spending your grandkids' inheritance on yourself, which is rude. So instead the money goes into a fund, the fund invests, and the returns quietly help pay for hospitals and schools while the original pile stays intact. Singapore literally funds the single largest chunk of its national budget this way, from investment returns. They built a country that partly runs on dividends. Now, and this is the part that actually matters, why are these funds so powerful? It's not the size. Plenty of people manage gigantic piles of money. BlackRock, the asset manager, handles 14 trillion, more than all the sovereign funds combined. So size isn't the secret sauce. The secret sauce is time. BlackRock manages other people's money, and those people can ask for it back. Every fund manager on Earth lives in terror of the same thing: a client who panics, a quarterly report that looks bad, a margin call at the worst possible moment. They are all, every one of them, on a clock. A sovereign fund is not. Nobody can withdraw from Norway. There's no nervous client, no redemption window, no, the board wants results by Friday. Its time horizon isn't 5 years or 10 years, it's forever. It's literally investing for citizens who haven't been born yet. And that one feature, patience, the ability to simply not care what happens this quarter, turns out to be a structural superpower. Think of it like this: a hedge fund is a clever fish, fast and sharp, but it can drown in a storm if it's caught at the wrong moment. A sovereign fund is a whale. It just sits there, the storm happens to it, and it does not care. It can wait out a crash that wipes out everybody who needed their money back. Which brings us to the single best demonstration of that power: the year it all went wrong for everyone else. 2008, the financial crisis. Wall Street is on fire. The most storied banks in America are hours from collapse, and they need tens of billions of dollars immediately, the kind of money you can't raise by passing a hat around. So who actually showed up with the cash? Not America, foreign governments. Citigroup drowning took $7.5 billion from Abu Dhabi, then more from Singapore, more from Kuwait. Morgan Stanley took $5 billion from China. Barclays took about £7.5 billion from Qatar, which, fun detail, is the only reason Barclays didn't end up partly owned by the British government instead. The banks at the absolute center of Western capitalism were rescued, in their darkest hour, by the patient pools of state money from the Gulf and Asia. Because they were the only ones in the world who could write a check that big, that fast, and then just wait. That was the moment the West looked up and went, wait, who are these people and how much money do they have? The funds had existed for decades, quietly. 2008 is when they walked on stage. Now here's the twist I promised, the thing that breaks the scary omnipotent state money story in half. You'd assume these funds, with their infinite patience and infinite money and privileged access to every boardroom on earth, must be brilliant investors. Genius, dear, unbeatable. They're frequently not. There's actual peer-reviewed research on this, and it is brutal. One major study found that companies sovereign funds invested in tended to underperform afterward. Researchers measured something they politely call the sovereign wealth fund discount, roughly 2.5 percentage points worse than comparable private investors, year after year. The funds collectively lost tens of billions on their crisis-era stock bets. China's fund made a celebrated investment in a Wall Street firm right before it cratered and got roasted at home for it. And the researchers found a grimly funny pattern. The more politicians were involved in a fund's decisions, the worse it tended to do. Shocking, who could have predicted that putting a guy whose actual job is politics in charge of stock picking might go poorly? So hold both of these in your head at once, because this is the real shape of the thing. Enormous, patient, world-spanning power that also routinely makes mediocre bets and loses money like everybody else. Not a chess grandmaster, more like a giant who's strong enough to knock down a wall but keeps tripping over the furniture. All right, you've got the machine. Now let's meet the players, because the whole savings account or weapon question only makes sense once you see how differently each one plays it. Same machine, wildly different drivers. Player 1, Norway, the patient saver, the model citizen. $2.23 trillion built entirely from oil and run like the world's most boring, most honest librarian. It spends only a sliver of itself each year, a strict rule, only the expected returns, never the principal, so the pile keeps growing. In 2025 alone, it earned a 15% return and made about $247 billion in profit. That's $250 billion of profit in a year for a country smaller than Minnesota. And here's the Norway paradox, the thing that makes it the most interesting one in the whole bunch. It owns a piece of everything, and it deliberately, by written rule, caps itself below 10% of any single company. It will not take control. It votes at shareholder meetings, it nags companies about ethics and climate, it keeps a public blacklist of firms it refuses to touch, coal, tobacco, certain weapons makers. But it stays the engaged minority, influence without control. It's a thin layer of paint spread across the entire world economy, it's everywhere and it's never the wall. And that's your first answer to the big question. Can a fund be globally influential because it's restrained and transparent rather than despite it? Norway's whole existence says yes, its power comes from being trusted. Hold that thought, because the next guys took the exact opposite approach. Player 2, the Gulf, and here the machine stops being a savings account and starts being a strategy. Saudi Arabia's Public Investment Fund, the PIF, is chaired by the Crown Prince himself, and it is not subtle about its mission. It's the engine of Vision 2030, the plan to drag the Saudi economy off of oil before the oil stops mattering. So the PIF goes shopping, and the receipts are wild. It bought the English football club Newcastle United. It launched a breakaway golf league, LIV Golf, basically to wage war on the PGA Tour. It owns chunks of Uber and an electric car company. And in 2025, it bought the video game giant Electronic Arts, the FIFA and Madden people, and took it private in a $55 billion deal. The largest buyout of its kind in history. Most of the fund's entire deal-making for the year, one video game company. Now, why does an oil kingdom buy a golf league and a football club? Two stories, and they're both true. Story 1, diversification and tourism, and building a real entertainment economy. Story 2 has a less flattering name, sports washing. The idea that if your country's human rights record is, let's say, frequently in the news, owning beloved sports teams is a remarkably effective way to get people to associate your name with a last-minute winner instead. Human rights groups push that framing hard. Both things are happening at once, and any honest version of this has to hold them together. But here's the catch the spreadsheet doesn't warn you about. A lot of this is losing money. LIV Golf, the breakaway league, its UK entity lost roughly $1.1 billion over a few years, with auditors literally flagging doubt about whether it can keep going. The goal was never profit, it was a seat at the table, leverage over the sport. And the kingdom's giant futuristic desert city, NEOM, the Line, a 100-mile mirror-walled metropolis, has been quietly shrinking from a 1.5 million-person, trillion-dollar dream down to a roughly 300,000-person prototype, with billions in write-downs. Turns out the patient oil money can still buy expensive mistakes. It just gets to be more patient about admitting them. Right next door, the United Arab Emirates is running a smarter, scarier version of the same idea, and it's the clearest glimpse of where all of this is heading. The UAE doesn't just invest, it's wired its money together into a single strategy. Take the cash, plus the cheap energy it already has, point both at artificial intelligence, and use the whole package to buy closeness with the United States. They've got a fund specifically for AI. They co-founded a $100 billion partnership with BlackRock and Microsoft to build the physical guts of AI, the data centers, the power. One of their AI champions, a company called G42, took a Microsoft investment and a Microsoft board member, and in the process quietly pivoted away from Chinese technology toward American systems. That's not a stock trade, that's a country using investment as a way to pick a side in the biggest geopolitical rivalry on Earth and get paid to do it. Which is the perfect setup for player 3, China. Because if the UAE is using sovereign money to cozy up to America, China's funds are exactly what America is afraid of. China's main fund was created to do something sensible. It had a mountain of US dollars from selling the world its stuff, and parking all of it in low-yield government bonds was leaving money on the table, so it spun up a fund to invest more aggressively. Fine, normal, but because China is, well, China, every overseas investment gets read through a security lens. Is this a financial bet, or is it an attempt to get hold of critical technology? The funds are more state-directed, far less transparent, and that opacity itself breeds suspicion. You can't prove what you can't see, so people assume the worst, which in geopolitics is sometimes correct and sometimes just a vibe. And that suspicion is exactly why the countries receiving all this money built a bouncer. In America, it's called CFIUS, a government committee whose entire job is to stand at the door of the strategic economy and decide which foreign money gets in. Buy a hotel? Sure, come on in. Try to buy a semiconductor company or a firm sitting on the personal data of millions of Americans. CFIUS can slow you down, attach conditions, or get the president to kill the deal outright. So no, the funds cannot simply buy whatever they want. There's a velvet rope, and sometimes the giant pile of money gets turned away at it. Now, every system this size has a cautionary tale, and this one's a doozy, because the most infamous sovereign wealth fund in history wasn't actually a sovereign wealth fund at all. Malaysia's 1MDB, it looked the part. It had the name, the official seal, the air of national purpose. But it had no oil surplus, no trade surplus, nothing to actually invest. It ran on borrowed money. And billions of that borrowed money simply vanished. Roughly $4.5 billion misappropriated, according to the U.S. Justice Department. Money that wound up in luxury real estate, art, and I am not making this up, helping finance a Hollywood movie. The investment bank that helped raise the funds, Goldman Sachs, ended up on the hook for more than $5 billion across various settlements. Malaysia's former prime minister went to prison. 1MDB wasn't a savings fund or a weapon. It was a piggy bank with a hole drilled in the bottom, and it's the permanent reminder of what these things become when you remove transparency and add a politician with signing authority. And then there's the darkest lesson of all, the one that flips the whole power dynamic. We keep saying state money is powerful, but state money held in someone else's country is a hostage. When Russia invaded Ukraine in 2022, the West didn't only send weapons to Kyiv. It reached into the financial system and froze roughly $300 billion of Russian state reserves, most of it just sitting in European accounts, suddenly untouchable. One keystroke. The lesson every fund quietly absorbed that day: the global financial system you're invested in is run by people who can, if you cross a bright enough line, simply switch your money off. Your greatest strength becomes a leash. So savings accounts or weapons? Here's where it all lands, and it's more interesting than either bumper sticker. These funds are patient pools of state money whose real power was never illegal manipulation. No regulator has ever caught them secretly puppeteering markets, and honestly, they lose too often to be that good at it. Their power is quieter and more structural. Its scale, its timing, showing up with billions when everyone else is broke, its access to every boardroom and prime minister on earth, and it's the ability to fuse a financial bet with a national goal so tightly you genuinely cannot tell where the investment ends and the statecraft begins. That's the honest answer, not a savings account, not a weapon. A pool of patient capital wearing whichever of those two masks the moment requires. And the masks are about to matter more than ever because the game just changed. The new prize isn't oil or real estate or even football clubs. It's artificial intelligence, the chips, the data centers, the raw electricity to run them. Sovereign funds poured around $66 billion into AI and digital infrastructure in a single year, and the whole gravity of the system is bending toward the United States, which pulled in about $132 billion of sovereign money in 2025, nearly double the year before. The funds are quietly mutating from investors into builders. They're not buying a slice of the future anymore. They're laying the concrete and stringing the power lines for it. Which means the line between "we made an investment" and "we are now part owners of a nation's strategic infrastructure" isn't blurring. It's basically gone. So look at any of these funds and ask the only question that actually decodes it. Not how big is it, but how transparent and who's holding the pen. Norway shows you what state money looks like in the daylight, rules-bound and trusted and dull in the best possible way. 1MDB shows you what it becomes in the dark, same machine. The entire difference, the whole gap between a national blessing and a national heist, comes down to whether anyone's allowed to watch. $15 trillion owned by governments, quietly threaded through almost everything you'll buy, use, or scroll past today. Not a conspiracy, not a savings account. Just patient money wearing a flag, playing a very long game, and now you can see the board. Subscribe to Systems Demystified. Next time we crack open another machine the world runs on and forgets to look inside. Something looks simple until you peek inside. This is education, not financial advice. Go look at how the world actually works.